Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Gligoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hey guys, welcome to Leafy Podcast. It's Jennifer Gligoric, COO of Leafy Legal Services, and my CEO, Brian Price. And today we're here with a super fabulous guest. For the last 17 years, he's been a real estate investor, and now his big deal is notes. He is just absolutely incredible. He's a featured speaker. He's an educator at dozens of investment clubs and real estate workshops across the country. He's a fellow Texan. He lives in Austin, and my mom's there in Lago Vista. Hi, Mom. And he's syndicated. He's got an AM show, and we're going to have all the links for that. And then for all you lucky people, there's going to be a free book because our Leafy podcast audience gets all the cool stuff. So let us welcome Scott Carson. Scott Carson is the president and CEO of WeCloseNotes.com. So hi, Scott. Welcome to the show.
I am honored to be here today. Excited. Thank you for that intro.
Awesome.
Rocking and rolling on a afternoon here. It's November or whenever you guys listening, and it's still hot in Texas.
It is still hot. In fact, I was so hot. I have my hair all piled up. And the first thing Brian said when we got on camera, he was like, "What's on your head?" And I'm like, "It's my hair."
That's right. Well, normally it's down. Normally it's a little higher. So I was just wondering. So anyway, you look great though, Jennifer. I appreciate you.
I'm sweating. It's hot.
It's hot. I'm in Southern California. It just cooled down. So I feel wonderful. So anyway.
Southern California have nothing to talk about when it comes to weather. It's always
That's right. It's always perfect. So I was looking at your website, Scott, and one of the things I was interested in your story, how you actually got into note buying and selling. And so I thought it'd be interesting and kind of starting off, kind of talking about how you kind of got into real estate and then switching over to notes and why you like that so much.
Yeah, no, it's a great place to start because it comes from starting and then failing and then starting again for the most part. I was like a lot of people, graduated college, got married, bought our first house. This goes back into 2001, 2002. All excited. It was a great time to buy then. We bought 2 more investment properties that were going to be the landlords because I could fix about anything. I grew up in a small town in South Texas called Ingleside, and Dad owned the local hardware store. So I was always the indentured servitude on the weekends, digging ditches or running pipeline or electrical stuff. So I could fix it all. I'm pretty good in my hands. Doesn't mean I like doing that, but about that same time we closed on our third house, our second investment property, the market just tanked here in Austin. Dell laid off a lot of their employees, which those were the renters in my 2 houses. So I then became a deadbeat borrower because our tenants couldn't pay their rent. And then I got laid off as the company I was working for at the time closed their offices here in town. So I joked that we were making 6 mortgage payments, 3 firsts and 3 seconds on a private school teacher salary of $30,000, and you can figure out how far that goes. So fast forward, I got our assets out of a sling, was able to get rid of the 2 investment properties, keep our primary by doing a loan mod, did whatever I needed to do to survive, got back into finances. I became a banker with JP Morgan Chase. A buddy of mine started a mortgage company and kept recruiting me to come in. So I made the leap in 2005 to working with him. And, we were very fortunate to have a couple of investors that taught creative financing, wraparound mortgages, subject tos, distressed notes. And so for a couple of years while I was running the mortgage company with my buddy, I was able to soak up all this energy as like an apprenticeship on the creative financing and fix and flipping side, so that when everything hit the fan in 2008, I left, gave my half of the mortgage company back to my buddy, and started buying notes. I started just dialing for dollars and reaching out to asset managers at banks and secondary marketing professionals. Some of the banks that we were originating from originally to buy their distressed debt. And that's been over a decade now. We do a lot of webinars and teaching, and I'm a big proponent that, I had a really very successful and very unique situation those 4 years. And so I made a promise that if I was able to do well, to be able to give a lot of information back to those that are interested, because notes, there's a lot of moving parts to it. There's a lot of different things that can go wrong. It's not a simple It's not a get-rich-quick scheme, I'll tell you that. It takes time, but you can build a lot of wealth. And that's why the banks are the biggest buildings and the most successful institutions out there, because they're on the paper game. Most of us are in the paper game. We're just on the wrong side of the transactions. You know what I mean?
We're paying into then getting it out. Huh?
Exactly.
Yeah.
Yeah, exactly. And then the way the banks leverage that money and arbitrage cheap funds to go out, it's a fascinating game, and that's why I love it so much.
Awesome. That's interesting.
So tell me a little bit about how that works. So like, what is your typical day? You know, this is very different from the real estate investors we talk about. You're on like a totally different side from that. And so I'm clueless. So tell me, like, what does it even mean, buying notes? So what do you actually do?
So I'm the dark side of the real estate. In some cases, I say the sexy side. Exactly. Hang on a second here. I've got noisemakers.
You came prepared.
I got prepared. You know, a lot of people talk about the note business, but they're so busy just blah, blah, blahing. All right. What I'm doing is I'm actually reaching out to banks. I'm not mailing out yellow letters or postcards or putting up bandit signs or knocking on doors. I don't do that because my base clients are banks, actually. That's where we get our deals from. It's not the individual consumers. It's not people mailing out foreclosure postcards where they might get one property. I wanted to work smarter, not harder in the 21st century, because Scotty's here to beam you up. Anyway, yeah, I'm full of all sorts of jokes here. We'll have a good time. But anyway.
No, this is cool, man. I love it. Okay.
So what I do is, instead of me reaching out to the consumers who are in trouble, and everybody that sent out postcards knows that consumers don't call months before they go to foreclosure. They call the week of or the week after we're trying to get some help. We reach out to banks, and the banks will send us lists. It may be one asset. It may be 1,000 assets of loans that are on their books where the borrowers aren't paying or haven't paid. And it may be 30 days they haven't paid and they're looking to sell it. Or it may be 4 years, 5 years where the bank hasn't started the foreclosure process yet and they're looking to sell that debt off. And since it's a non-performing note, I will pick that asset up, pick up the mortgage, and become the bank at a very big discount of what compared to what's owed. So let's throw some numbers behind it. If a borrower, say, is in a $200,000 house, but maybe they've lost their job and maybe they owe $210,000, $220,000, but they haven't paid in 6 to 12 months, I can probably pick that debt up for around 50 cents on the dollar. So let's say, so I'll pick it up for like $100. That's what I pay. The borrower still owes $210,000, but now that I'm into it at such a great investment amount, I have a lot of flexibility to work with that homeowner to keep them in the house, which is what I prefer to do. We always want to try to rehab the borrower, not rehab the property, as I like to say. So we go into our borrower outreach once we buy an asset. Hey, what happened? Tell me your country western songs. You get laid off, your dog died, going through the big D, whatever it might be, get sick. Let's figure out, can you start paying on time again? So let's throw some numbers. So let's say their mortgage payment originally was $1,500 a month, and say it was like 6-7%. Well, if I can get them to start paying on time now, and their existing payment and their original interest are like 6%. Well, if I paid 50 cents an hour and they start paying on time, it's like a 12% ROI to me immediately. Okay.
Right.
Interesting.
Now, if I can get them to bring a little bit extra to the table, which is what we require, I don't care if you're a year behind, bring 2, 3, 4 months to the table or $5,000 to the table or something. Because I know you've got a big screen TV and you ain't been living for free, or you have been living for free for a few months. Let's bring a little. I don't care where you get it from. Borrow it. Just bring some skin in the game. That adds another $4,000 or $5,000 to the table. Now I'm sitting at roughly close to a 20% cash and cash return. They pay on time for 6 to 12 months. It's now considered a reperforming asset that I can now turn around and sell back to Wall Street, sell back to banks, sell to other investors as a performing note. That at 80-85% of value of the unpaid balance, now I'm sitting and making a really good return. So,
do you always sell the note back, or do you end up keeping any of them? Okay.
It varies. I usually, on the notes that I hold on to, on ones I'm going to hold on to them at least a year. So it's a long-term capital gain versus a short-term capital gain.
Oh, okay.
Okay. But yeah, there's stuff I hold on to. I have a portfolio of performing notes that just pay on a monthly basis. Some people have been paying me for 9 years on their debt. They're paying their mortgage down, which is great. Not everybody pays. Not everybody wants to work with you. So well, I would love it if everybody modified. That's where we, modified or reinstated. That doesn't always happen. We modify, we try to work out. There's like 10 different exit strategies. If the borrower can't pay, we try to have them come in and have a friend or a family member take over the mortgage, assume the mortgage. We'll try to modify it if it makes sense. If that won't work, we'll offer cash for keys, or we will pay them to walk away. Mm-hmm. Sometimes we'll just do a deed and only let them walk away if they owe money or owe taxes and stuff like that. We'll do a short sale. You guys are familiar with short sales. We've done plenty of those. And then, we'll sometimes get cash payoffs. I'm like, listen, what do you have in your 401k? Go cash it out. We'll do a settlement and forgive you for less than what you owe, but more than what I paid for the note. So it's still a good day. Yeah. Or, if they don't work with us, then we foreclose and try to, go the legal route. And each state's a little bit different in time frame and cost to do that. Like here in Texas, since we're, the fastest in the country when it comes to foreclosures and highways and also executions. All right. The banks want more for their assets here because we can foreclose fast. So I buy a lot. I don't see much stuff in here in Texas. What I do is it's often overpriced. I get better bang for my buck. Pardon the phrase there. In Ohio, in Michigan, and kind of the Big Ten Southeast Conference parts of the United States.
Oh, okay, cool.
And so let me ask from an owner's perspective. So let's say somebody's sitting at something. Can they approach you to take it? Like, what if they're thinking, man, because I know I had to do a modified loan back in the day during the whole crash and everything like that. And it was a horrible process. It was humiliating, and they call you all the time. And I never missed a single payment. Mm-hmm. So I always paid. I called them ahead of time and I said, I know I'm going to lose. I know I'm losing my job, and I think I can pay $200 less. I modified before I ever missed a payment. So even though I never missed a payment the entire time, it tanked my credit 150 points, even though I paid on time the entire time. And it took 1 year. I got back, and then it was like another year until I went back to the land of the living again. So how bad is it if they can get if they do it right for you? Is it the same exact sort of process with their credit?
So if somebody's working with us, we don't report negatives to the credit bureaus unless we're foreclosing on them. So that's one of the things.
That's completely different than Wells Fargo. Wells Fargo will tank your credit the moment you sign the modification, so you have no one else will take you. They want to ensure when you get back on track, you have to. Actually,
I'm going to disagree with you there because I deal with so many banks on that.
This is what happened to me.
I know that's what happened to you, but that's not Wells Fargo's policy. Okay. That's a bank's policy. A bank's policy, as long as you're paying, there's no incentive for them to really modify for the most part. And if you want to do a true modification, a lot of times they want you to be at least 3 months behind. I know it's ass backwards for banks, but that's the way they look at it. Because as long as you got money paying, they don't want it to become a non-performing because that reduces their ability to leverage the income coming in. So for every dollar...
Are you saying that that's against their policy? Because I never was late a single payment. I called them ahead of time, and they tanked my credit. Do you think I have a case? I mean, now we're going off into my own personal thing, but seriously, would I have a case against that if that's not standard business practice?
I'm not an accountant or an attorney to give you legal advice on this.
Well, I know that. We're Leafy Legal Services, but what do you think?
How many years ago was it?
Probably 8 years ago.
Doesn't matter then at this point. So no, it doesn't. You would not want to waste good energy after bad energy. You're back in the living. And you know what? The beautiful thing is if you got back pain, I don't know what they did to do that.
No, they when I was done and I had a job, I modified back. I mean, I still have Wells Fargo. I don't like them. I mean, I still have the same note. And I've never missed a payment, this whole time. It doesn't mean that I didn't go through this nightmare time for a long time.
Now, what they may have done, here's what a lot of banks do sometimes is if you're sending in partial payments, they won't apply it until you've made up a full payment on it. And so if you send like a payment this month and then send the second half in, they won't apply it till the next month when you get a full payment there. That gives them a right to foreclose if you don't follow up with more payments and they return.
No, but I had a modification agreement before I ever did that.
Then that may have dinged it if they put it in the system. So I honestly, I'd have to look at it, but banks want you to be paying on time because the minute they have a non-performing note, even a modified loan or something like that, for the most part, if you start getting late, it affects the value of that paper. So if you go a month late, it's going to reduce the value of that note to them by 5-10%. You're 60 days late, 10 to 15%. 30 days, 90 days late, that's you'll be losing like 20 to 30% of value of what that loan is at. So that's why they call you every day when you're behind.
They called me to make sure I was going to make it. And I was like, because it was auto pay. You can't do a modification with Wells Fargo unless you have it auto pay out of your bank.
Here's the thing. I don't buy notes from Wells Fargo, Bank of America, Chase, Citibank. And your original question, the reason is they're too big. They want you to buy a $50 million portfolio of loans.
Oh, wow.
And they're even getting a hold of somebody at Bank of America, they don't know who to talk to sell a portfolio of notes because they're so fast backwards. But what we do buy is we buy from a lot of the smaller regional lenders, banks, different real estate hedge funds. It's hard if somebody's got a non-performing note, and we get this all the time, hey, can you buy my note? And then you become my bank. And I'm like, no, it's very hard. I've only been able to do it like a couple times. And it was just the smaller regional banks. We had good success with smaller regional banks, but the bigger 5-10 banks, it's not worth it because they won't know who to talk to. And then you're going to buy such a big portfolio. And personally, I don't want to be, I got to make sure that they're able to pay. They're going to be able to work through finances. Because when we're talking to a borrower, when we reach out to them, it's like, hey, what's going on? What can you pay? What's the situation? And we have often found that people will drag stuff out. You give them an inch, they'll take a mile and never want to pay you and drag it out. And then we got to foreclose on you.
Wow.
So.
When it comes to finding, notes to buy and, regional banks and things like that, what's kind of the overall process you kind of go through in order to find those types of deals that are out there?
That's a really great question, Brian. I get that all the time. I'm so glad you brought that up. There's a couple things that you can do. Every bank, especially every FDIC chartered bank, has to file quarterly reports with the FDIC on how fit they are financially, I guess you could say. How much in reserves they have, how many in defaults they have. So they provide these quarterly reports to the bank. So that's a great place to go. I go to the FDIC website and start looking at banks. And if they start increasing the amount of reserves of cash they're holding onto, that's usually a sign that they're looking to sell off in the next quarter or two. The fourth quarter and the first quarter of the year are always the busiest times of the year because that's when the bank's the most motivated to get this bad debt off their books before they file their annual reports.
Okay.
Or their year end, fiscal year end is the end of March, something like that sometimes. So that's a big thing. There's also different websites you can go to that track that kind of stuff that you can pay a subscription for. What I'm a big believer in, and I started doing this earlier on, was just dialing for dollars, pulling lists of banks off a website called laneguide.com. It's like $165 a year, but Lane Guide, like you're in your own lane. And that will give me a lot of inside numbers of special asset managers or secondary marketing professionals. So those are the two names of the job titles of the people that handle the sale of the assets. You're not going to walk into your local bank and say, I want to buy notes. They're going to escort you out or call customer service. They're going to say this person's crazy. But these internal departments, they're constantly buying and selling notes. Every bank buys and sells. It just depends on the size and amount that they're looking to move or what they have on their books to get rid of. The smaller, really like 1-2 branch banks, they're too conservative. They can't take too big a discount because it affects them on a much larger scale than a regional bank in 2 or 3 states that's got 100 branches. They've got the flexibility to make up those deposits and income. So that's what we do. We just build lists and we do an email campaign. Send an email campaign out the first Tuesday of the month. We follow back up to see those who have opened the email with another email on Thursday, or we'll do a phone blitz. Making 50. That's what I used to do: 50 to 100 phone calls to asset managers in a day, every Tuesday, Wednesday, Thursday, and that just helped us build this amazing list of contacts that we can reach out to. For those that are working full time, LinkedIn is a great way to also find these people, and you can do that after hours and connect with them and send a message as well.
Yeah, that's interesting. Yeah, be able to do it more online and then connect with them on, a phone call or something like that. That's definitely a cool strategy.
It's a lot easier than dropping 1,000 postcards out. It's a lot more cost effective than doing that heavy marketing to get a 1% to 4% response rate. This way, when you get a 12 to 20% open rate, that gives you a whole list of people just to freaking pick up the phone and dial straight from an email. So it's smarter.
Yeah, we're big on LinkedIn, and we love our LinkedIn clients. If you're respectful on LinkedIn, and you just get to talk to like the most amazing people, really.
You mean you're not one of these people reaching out and trying to sell cannabis when you connect with people immediately?
No, we have experts. Yeah, that's it. Cryptocurrency is
Crypto's
going
kind of a big one these days. Everybody has their own crypto. So
Yeah, no. I will reach out to people. We're always looking for guests and things like that. And then we have a video that I send them like, here's what we do. Because a lot of people are like, asset protection. What is that? They don't even know. But we do send them stuff. Yeah.
It's a great strategy. I love that's what we do to add to our podcast is reach out to people and send a short little 2-minute video on what we're talking about. We do that with asset managers too. Because, hey, here's what I'm looking to buy. What do you have in your books that we won't get rid of? Let's talk. Click on the link to schedule a call or shoot me what you have.
Mm-hmm.
Yeah, it's really fascinating. Like this is its own total subsection, but I love the fact that you can keep the people in their house. We're all about the idea of working with real estate investors. I just love the idea of taking a property that's going to be falling apart or leaching lead into our environment and making it new and putting a family in there. It's good for homelessness. It's good for our economy. It's good for contractors. I mean, one real estate investor can do so much for so many different areas. I just love it. Like I love this industry. And now I found out, something else. First I was like, but wait a minute. I did a modification. But if it's done correctly, then you can get back on your feet, you make money, the bank gets paid back on their thing, and then the homeowner gets to stay in their house and get to finally get back on their feet again. And so it can be a win-win-win situation. It's not going to be great. It never is, but it still in the end can be win-win-win.
Well, it can be really great if you think about this. If you think about what families are going to. I mean, we live in one of the most highly uneducated, financially uneducated societies out there. There's so many things that people don't know about. The banks aren't telling people their options. They're steering what they would prefer versus giving them a full page. People just don't know. And then when they get letters and phone calls, they're embarrassed. They stick their head in the sands like an ostrich. It's a very stressful situation.
Yeah.
And then one of the things that we like is we actually prefer occupied assets versus vacant assets like most investors do. Because if it's a vacant note, it's probably been trashed out. The copper goblins have showed up and stripped the property. The air conditioning, which you're so needing today in Galveston, may have gone out on its own vacation on a walkabout. You know what I mean?
Yeah.
And it allows for us to keep that, that block value up. Because if you have a foreclosure, it's going to drop the value of the neighborhood, 5-10% across the board. So as we say, we're making America great again, one defaulted mortgage at a time.
That's a good one. I do like that one. I like it a whole bunch. You had a question, Brian. I
was just wondering, when you're looking at the notes and stuff, I was just wondering, how much information do you get before you buy it? I mean, that's one of the things that, I was curious about.
So that is a really good question. We get everything, basically. I mean, we get most of these banks are servicing the note, or they have a third party servicing company. So we'll get the borrower's name, their payment stream for the last 12 to 24 months, what they put down, their social security number, co-borrower information, value of the property, what they think, what they owe, legal balance if the bank has had to pay any taxes or other fees, servicing notes. So if the borrower's called in and told the servicer to go F off,
They get all that too, huh? Oh, that's great.
That comes in a spreadsheet, or we call that a tape. It's basically a spreadsheet that we can cherry pick loan level pricing on. So we'll submit those bids in. If they accept our bids, then they'll send us the actual collateral file, so the loan files. We'll get oftentimes get the origination documents, the 1031 stuff that basically is the opening of the kimono. What did the borrower do? What did they do for work? What do they have in retirement? What other assets they might have? What kind of income they're making? If they've sent in like a short sale default letter, we'll see that. A hardship letter or applied for a loan modification, we'll see those documents in there. Their bank statements. So we'll get that in the collateral file and be able to review that and the notes. And then we always double check the value of the property. We always put eyes on the property through realtors. We're not getting inside views because it's occupied and we can't go into the property. Unless, of course, it's been listed for like a short sale or something like that in the past. Then we get those type of photos. But it's all exterior. So we base it on the borrower. I mean, we do a lot of, as I like to say, social sleuthing. Facebook stalking, where are they working at? Are they still have a job? What are they doing on Facebook? We've tracked down borrowers before we buy the note where the lady was like, well, what am I going to do this month? Pay my mortgage or go to Disney? We're going to Disneyland. I'm like, we're not doing a loan mod for you. Or another lady bragging about the thing that she did, so she had enough money to buy a brand new car. I'm like, oh, you haven't paid your mortgage in 12 months. So when we have that phone call, it's a true come to Jesus meeting. Like, listen, we see that you just bought a brand new car. You bragged about putting $5,000 down. Guess what? You got to bring $5,000 as a down payment towards your back payments first to keep you in the house, or we're going to go ahead and go the foreclosure route. You know, I can be a borrower's best friend if they really want to work with us, or I can be their worst enemy. In our cases, the pen is truly mightier than the hammer in real estate when it comes to note investing, because I'm the bank, and the bank always gets paid. The only thing that really trumps what we do would be taxes, and we're always checking property taxes to make sure we don't get wiped out in a tax foreclosure.
Oh, okay, yeah.
Go that route. That's an important.
Would you be liable for taxes if it did go in foreclosure and the note was? Oh, okay.
Yeah. So I don't want to get wiped out. So we will we'll often pay the taxes, or if a borrower is working with us, like if they're getting ready to walk away, we'll have them call and negotiate a tax payment plan for the county, and then we'll take over that payment plan when they leave. That gives us a little bit more flexibility with expenses.
Okay. Oh, that's interesting. Yeah, it seems to be quite a bit of stuff going on. I mean, is there certain metrics that you kind of like, hey, this is what we'll start off with, and then, you know, maybe we'll consider other things? I don't know.
Yeah, I mean, when I get a big spreadsheet, the first thing I do is I look at occupancy. I want to work with occupied assets, because then there's a lot less unknowns. I mean, if somebody's living in the property, they're probably taking pretty good care of it for the most part. You know, that's an important thing. I prefer trying to see if somebody's made a payment in the last 12 months. It's usually a sign that they want to try to stay in the house. That works well. Okay. You know, if I try to find places where either the rent rate is higher than the mortgage payment, which is most of the cases, because if a borrower's behind, they're already starting to look at assets or places to move to if they think they got to be evicted. And I'm like, listen, stay in the house. But I know if you were to try to move out, your mortgage payment's $800, rent would be $1,200 plus. Then you got, you know, deposits. So instead of you spend that $2,000, just give it to me. We'll keep you in the house. We'll work with you. And we'll, you know, if you start making your payments on time again, I mean, I'll do, like, we've got a thing going out right now. Hey, if you make a payment now, we'll forgive a payment. Or if you want to go get cash, you want to go refinance out, we'll drop 10% off your balance. Yeah, to help expedite some of these things. So we get creative. That's the whole thing. I mean, sometimes we'll do things like a borrower was trying to go through a loan mod for 4 years. 4 years, and her mortgage had been sold 4 times. And I'm sure you can imagine how big that loan file was with all the documents. Yeah. And it was literally a banker's box by itself when I got it.
Wow, that's crazy.
And it was. I mean, so they lived in the house for 18 years. It wasn't a big mortgage. They owed $60,000 on a house that was worth $35,000. The value had gone up. They cashed then a loan, and then the balance was dropped because of everything going on. This lady, when I got her on the phone, if we bought the note, I mean, I only paid $12,000 for the note, so I only paid like a third of as is value or a fifth of unpaid balance. And I said, "What's going on?" She started crying. She's like, "I've been trying to do a loan mod for 4 years. We want to stay. We've raised our kids. You know, I'm just so stressed out because we've done this." And I said, "Listen, let's solve this right now. Yeah, I've seen all your financials. Can you start making your existing $543 a month payment right now?" She's like, "Yes." I was like, "Okay. Can you bring another $5,000 to the table? I don't need it all at once. Can you bring $2,500 to the table in the next 2 weeks, and then maybe that $2,500 over 10 months where you're paying an extra $250?" She's like, "Yeah, I think I can do that." I said, "Okay, great. If you can do that, here's what I'm going to do. I'm going to drop your interest rate from 9% to 0% interest. So every penny you pay goes towards principal. You pay on time for 12 months. I'm going to drop what you owe of 60 plus grand down to the value of the house in a year at 35 to 40 grand. We're just going to forgive that extra because I can't go after. There's not really value there. So, and then if you start making that extra payment and every drop of your payments go to principal, instead of it taking you 29 years to pay off the house, you'll be paid off in 73 months. And she was like, "Are you serious?" I'm like, I said, "I can have this all written up in less than a day and get it started as soon as you can come to 2,500 to the table." So she, like, a week, her husband and her showed up to the closing table at my attorney's office there in Illinois, bawling. They were just so overjoyed.
Yeah. And, oh my God, this makes me want to cry.
Here's the kicker. 6 months on time payments. I get a letter from them. And Sheila and Will sent me this letter that they had a 20-year-old daughter who was having their first grandkid. They named her first grandkid Carson after me.
Oh, yeah.
that is the best story.
And they will have paid off. They'll have the house paid off by February.
Nice.
So they've we change lives that way. I mean, I wish every story was like that. There's a lot of stories where we've had to get aggressive and foreclose and boot people out when they didn't want to work with us. But we always give people the opportunity to, hey, let's work on trying to create a win-win for you and go from there.
That's interesting.
That is such a great story. I love that. I'm like so happy. And now you have this little kid running around with your name. So you're like, dun, 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 dun.
Yeah, well, it's not like people, do you have any kids? I'm like, not that I know of.
That's right. They could be named after you, but they're not yours.
Let's knock on some wood here real fast there.
That's right. So I noticed on your website you do a lot of live events as well. Why don't you tell us a little bit about that?
So, yeah, I've been training. I mean, this was such a niche. I'm only like one of 3 or 4 people that teach notes in the country, and I'm really the only guy that focuses on the distressed notes or the non-performing notes side of things. And that's what we started teaching people, because people started coming to me when I was posting the deals that we were doing on Facebook and speaking. People were like, hey, do you have a class? So we started a class, called it Note Buying for Dummies. We did that for a couple of years, where it was, we would do like 6 to 8 workshops a year. We've changed now as we've evolved. And for the last 4 plus years now, we do online workshops about 3 times a year. It's called our virtual online note buying workshop. It's live streamed like this via Zoom, how we're recording this thing. It's interactive. We bring on 3 to 4 vendors, like a servicer and a self-directed IRA, other stuff to help out with the investors. It's not a pitch fest like a lot of other workshops. Ours is all nuts and bolts and really good content.
That's great. Yeah.
There's millions of loans out there. I mean, in 2010, we were capped out. I mean, there's 15 million homeowners underwater. That's gotten better. We're still seeing about somewhere between 2 and 3.5 million homeowners are still underwater. So there's still a lot of debt out there.
Oh, really? Interesting.
Here's another number for you. 1 out of 10 homeowners right now is at least 30 days behind in their mortgage.
Really?
Wow.
That is interesting. I wouldn't even think of that.
They're at least 30 days behind. You've had all these people buy houses in new builds and things like that. And people are budget mindset when it comes to their mortgage payment, right? When they're buying.
Yeah.
They don't realize that at the beginning of the year here, those tax values are going to go from the raw land to the land plus the improvements, and they're going to be in default because they can't budget for the taxes. So we see a lot of that first of the year. Subprime is back. It's now called non-prime. I mean, there are hundreds of mortgage companies doing 100% financing to people as low as 500 or 520 FICOs. Ninja loans are back. They just call it something different. We're going to see a true repeat of 2008, 9, and 10, but it won't be the big short. It might be the little short this time around, but we're going to see a lot of debt hitting the markets. I mean, you can see auto debt is at an all-time default rate. Credit cards are at an all-time default rate. Medical bills. There's a lot of people that can't pay their toys, and they're selling their toys off now. So, everybody, as I said, everybody's in the note game. It's much better to know about this stuff. Even if you don't do it, you can use some of the tactics that we used in your real estate business. But it's good to know this stuff because nobody was really doing it a few years ago.
Yeah, it is good to know.
Yeah, I mean, you just don't. If you know how they're playing the game, at least you know how to play it on your side too. At least you know how the house plays the game, knowing that you could lose less if you're on the wrong side of it. But
just like that, just knowing that, hey, if you're buying a new house, this is what's going to happen with that. You're not going to be told that. By the realtor selling it, maybe, or maybe they will. There's a lot of realtors that are very, hey, by the way, make sure this. But most of the time, they just want to get you into a house, and they assume that you know these things. There's a lot of assumption it. So just that little tip alone. So, guys, we've been talking to Scott Carson. He's the president and CEO of WeCloseNotes.com. And as promised, because this was a lot of intense information with a ton of moving parts, so there is a lot of training that has to happen. You can't just go and walk into your bank, like you said, and buy a note. So you can go to WeCloseNotes.com. But even better, you also get a free book. So where you need to go is http:// and then go to noteblueprint.com. That's NOTE blueprint.com/book. That is noteblueprint.com/book. He's got it up there. Wait,
We'll have
say
the link
something,
below
Scott.
of this video as well, so you'll be able to click on it.
It's a 73-page book. You'll get an ebook on it. It's a 73-page book of me just kind of talking through it, training. It's a great way to kind of a good starting point for people that want to learn more about notes. It's not the end-all, be-all of training. You need to get more stuff to this. But we wrote it so it was a great kind of starting point for those that want to learn more about the note business.
Fantastic. Yeah.
Love that.
That'd be great. Yeah, because I know we probably even scratched a little bit, 1% of what we can learn from you. So I appreciate you having you on, Scott. You know, you've been a wealth of knowledge, and we could keep talking for quite a few hours about this very topic. So I appreciate you being on the call, and, happy to have you here.
Hey, man, thank you so much. And for you guys that are listening to this, they're not going to say this. Subscribe. Go over to iTunes, leave them a 5-star review. They're doing an amazing job with some great speakers and great guests and just great content. Trust me, they would love it. They may not ask you, they may forget about it, but go do it for them. They didn't ask me for it. Go do it right now, everybody. It's a great way to show that you're listening and that it means a lot to us as podcast hosts. So you guys are doing a great job. I've been binging to some of your episodes beforehand, and you guys are just doing a great job. So keep rocking it.
Appreciate that very much.
Thank you so much. I'm going to use that soundbite left and give it to Emmy and be like, you put this everywhere. But yeah, definitely, we're going to have all the notes underneath this. We're going to have all the links underneath this. Go and subscribe to us. We're on everywhere, Spotify, Stitcher, you name it. If for some reason you have a question for Scott and you don't go directly to his site, you can always reach out to Tammy. That's TAMMY at leafylegalservices.com. And either we'll answer for you or he'll answer, but whatever. We love talking to you guys and we like getting your questions. Thanks again, and we'll see you next week. Bye, everybody.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.